welcome to Terri's Tips. Guys, today is a learning, teaching video. Get a notebook, get a pen for real, because I'm going to outline five credit builder accounts that can boost your credit score super fast. Guess what? I'm about to blow your mind. No matter what level you're at, whether you're a 500, a 400, a 600, or 700. Yes, y'all, some of you guys with the higher credit scores are like, well, I don't need that. And you're missing it. You're missing the strategy, and you're missing how you're being stagnant. And sometimes these credit builder accounts, depending on what is wrong with your score, can actually boost you to that next level. Got it, good, guys. And so in this video, I'm going to outline 5 credit builder accounts. Guys, a few of them are some I have never talked about on my channel before. I'm going to give you the pros and the cons. I'm going to tell you what to look for, what I look for when I'm picking credit builder accounts. And I'm also going to tell you guys what accounts not to use. Now, quick message to my credit specialists. No shade today. I'm trying to help you guys level up your business. Some of you guys are recommending credit builder accounts to your clients that are hurting their credit scores. You just hear credit builder, you just go ahead and recommend people use them, not looking at what your clients are trying to qualify for, the bigger money, and the pros and the cons. And for you consumers, right, who are working on your own credit builder account, just because you hear the word credit builder doesn't mean it's the right type of account for you. I will explain. And for all my newbies, welcome. Guys, my name is Terri. I am a personal and business credit guru, board certified, work for TransUnion, right? This is why I teach you guys high level. I teach you guys strategy. And this channel's goal is to help you leverage your personal and business credit to build wealth, to qualify for the 5 and 6 and 7 figures, which is why I picked specific accounts, because this channel is about the big money. Got it? So I would love for you to subscribe. I upload brand new videos every Tuesday and Thursday. All right, so first let me tell you guys what I look for in a credit builder account. Everybody write this down. Credit specialists, write this down, okay? I look for what credit bureaus they report to. I always only use credit builder accounts that report to at least 2, usually all 3 bureaus. I try to always pick credit builder accounts that report to all 3 bureaus. Why? I'm a real estate investor. We're talking about legacy. We're talking about wealth building. So when you're doing things like looking for a mortgage pre-approval and business credit, what are they doing? A lot of times they're checking all 3. And you know, for real estate financing, they're doing a tri-merge. All 3 bureaus. Guys, I want you to understand the strategy. I'm going to tell you the thing, but I'm going to explain it so you guys understand what you're doing and why. And so if you have one credit builder account that only reports to 1 bureau, well, one super high score and the other 2 being low is not going to help you qualify, right? Because they do a tri-merge, they pick the middle score. So I only use credit builder accounts that report to all 3 bureaus. And in this list I gave you, one of them reports to 2. I'll take that just because of it giving you another option. The other thing I look at is if it's a soft or a hard inquiry. Oh my gosh, y'all, some of you guys are recommending credit builder accounts that are a hard inquiry. Some of you guys are using credit builder accounts that are a hard inquiry. No, especially when there's other options out there that are soft inquiries, which the ones I'm going to outline are all soft inquiries. Got it, y'all? Another thing is I look at the type of account, right? Revolving and installment. And in revolving, I look at major credit cards, not retail cards. That's a nugget right there. I'm about to explain that in a second also, guys. And then I also look at all the fees and what it is to qualify, the qualifying criteria, okay? So when you're picking credit builder accounts, look at those things. Even guys like the traditional secured credit cards, like the Discover Secured and Wells Fargo Secured, they actually do a hard inquiry and they can still deny you, even with the security deposit, which makes no sense to me at all. But that's why none of them are on this list, because it's a hard inquiry and you can have a bad credit score and give them, $1,000 and they still deny you. Ludicrous. Okay, so none of those are on this list. Now, let me outline for you real quick. For everybody working on your personal credit and for my credit specialist, I'm trying to free somebody today, okay? These are some of the accounts I never use, never recommend. And I will explain why. Number 1 is Experian Boost. That account right there, y'all, I can't, listen, Experian Boost, I am mad at Experian for doing this account. You have never heard me talk about Experian Boost. And actually, they actually do ads sometimes, I think, on my channel, but I don't know how to turn that off, right? Because they're in the credit space. So if you ever see Experian Boost, I don't endorse them. Now, why? One of the biggest reasons why, guys, they only report to one bureau, Experian. Business credit, real estate financing, tri-merges, all the bigger money do tri-merges. So you always want accounts that report to 2 or 3. That's reason number 1. Reason number 2 is because if you look at those accounts that you guys add, they're usually rated as utility or telecom. Well, guys, the 2 major types of credit for FICO scoring models are revolving and installment. Revolving and installment. So some of the scoring models don't even pick it up, because they're looking for revolving and installment to rate you. That's what's in the FICO scoring model. And here are these other accounts that are rated as utility and telecom. Come on, somebody. And I've done a bunch of strategy sessions with you guys. Some of y'all know where you were like, I did Experian Boost, and I'll pull a tri-merge, and Experian is your lowest score. Men lie, women lie, numbers don't lie. Come on, somebody. And so when I say, oh, you got Experian Boost, well, let's go over your scores. And you find your Experian is the lowest, you're like, and I'm like, exactly. Come on, somebody, okay? And the third reason why I don't recommend Experian Boost is because a lot of you have debt to income ratios. You have a lot of student loan debt. You have credit card debt. You have multiple cars. Sometimes you have charge-offs, right? You have all this debt on your report. I want you to think about what you're doing. When you're doing something like Experian Boost, right? You're adding a bill that is not currently on your credit report. And usually if it's like your phone bill or your cell phone or something, it could be like $100, $200, $300 something dollars, right? And you're adding that debt to your credit report, and you already have a debt to income ratio, and you're trying to qualify for a mortgage pre-approval, a cash out refinance, a conventional loan, and your debt ratios are off, but you've added something that's $200, $300, $400, $500 a month to your credit report. Come on, somebody. So no Experian Boost. Another one that you guys are going to be surprised at that I don't really recommend and I don't use is rent reporters, right? And I mean all of them. I'm just going to lump them all together. The majority of the rent reporter accounts, guys, only report to one bureau. Majority of them only report to one. A few of them report to 2. I think maybe 1 or 2 report to all 3. All right, same reason, debt to income ratio. Your rent payment could be $1,000 a month, and now you've added $1,000 a month into your debt to income ratio, and it can throw it off, right? Also, a lot of the landlords and companies don't even participate in it. It's a lot of hassle with kind of getting it set up. So I actually don't recommend rent reporters. Now, mind you, I have installment credit builder accounts that I'm going to outline for you guys. So I'm not going to tell you not to do something and not give you an alternative. The one last thing I want to add with this is, remember, I'm also a real estate investor. I went to real estate school. I was vice chair of zoning. I do this for real in real life. So this means that a lot of times if you have that rental income and you that rental payment history and you want to be included, but now you're considering not even whether your landlord doesn't participate in it or won't cooperate, or you actually understand not adding that debt to your reports, there's something called supplemental data. Guys, my underwriters, I work with banks every single day, all day, right? So a lot of times if you've been renting somewhere for 2 years, 3 years, 4 years, your underwriter, your processor, your loan officer can sometimes just get that information or get a letter from your landlord or whatever. Is there different ways to verify that kind of positive payment history and include that as supplemental data with your mortgage application. Got it, y'all? So there's ways around it. And the last one I'm going to say, and I want you guys just to think about this, like the My Jeweler card, the Finger Hut, credit specialist, can y'all stop? So first of all, no mortgage company is about to give you or your client, or if you're working on your own credit, nobody's about to give you a $300,000 mortgage because you have a retail My Jeweler card. It's a retail, like Finger Hut, My Jeweler, all these other like these Oxford, all these, I don't even know all the names of these other like miscellaneous companies. They're retail. They're usually a hard inquiry too, guys. And so think about it. I talked about the big money, right? So for real estate financing, for investment loans, for commercial loans, for conventional, the transition into business credit. And another reason why I don't use retail is because, guys, when you're trying to get high limit cash credit cards in business credit, they will look at your personal credit, especially if you're a new entity, even as a soft inquiry, and we can multiply. Come on, somebody. Everybody who's been through my 680 program, y'all know you had $2,000, $5,000, $10,000 personal credit cards, right? Visa, MasterCards, American Express, Discover. And because you had personal accounts, personal revolving trade lines with those high limits, we were able to multiply them, double to quadruple in business credit. You got a $5,000, credit card from Navy Federal Credit Union, right? And then we were able to get you a $15,000 business credit card, right? They're not going to do that for retail. So you have a $5,000 My Jeweler card. They're not going to be like, oh, you got My Jeweler, we're going to give you a $10,000 business credit card. No, they're looking at major credit cards. So again, it's retail. I don't use it. It's hard inquiry. I don't use it. It can give you a little bit of a boost, but you're not going to be able to transition that into business credit. Got it good, guys. I hope I freed somebody. And I told you guys, it's going to be a learning, teaching video, okay? So the 5 accounts I'm going to outline that are credit builder accounts. And again, no matter where you are, they will approve you right now. And this is a nugget for somebody. If you are working on your credit, do not work 6 months on your credit and then get a credit builder account. No, okay? The day you decide to work on your credit, you get the credit builder accounts that day. That's why I'm outlining these, because them reporting that positive payment history is going to help you build your score faster in a condensed time frame while you're working on the negative items. That's why I always tell you guys, 3 months, 6 months, 9 months, 12 months. Nobody should be working on their credit more than 12 months when you follow a proven system. Come on, somebody, okay? So day number 1, I'm going to outline, and I wrote down my notes because I won't remember everything. Self, Chime, Credit Builder Card, Credit Strong, and Extra Debit. All right, so let me start with SelfLender. Guys, revolving and installment credit. You want to have open, available, revolving, and installment credit to have a strong credit score. Now, pause. Some of you are high scores, 680s, 700s, whatever. You're not sure why you aren't growing. Some of you guys have a bunch of credit cards or a bunch of lines of credit, and then maybe your only installment credit is like student loans, but your student loans are in deferment. So it's not reporting positive payment history. Well, you guys are missing the successes in the details. You guys are missing the fact that you have revolving credit history and not installment, because those loans are not in repayment. Come on, somebody. So if you want to have a strong credit score, you want to get to the next level, you always want to have open, available, revolving, open, available, installment. SelfLender is open, available, installment credit. It is a soft inquiry. It reports to all 3 bureaus. Guys, they actually will approve almost anybody. You just need to have a checking account. I haven't seen them really deny anybody unless you don't have a checking or a savings that actually get linked. You can get approved day number 1. They actually also give you a credit score. I start monitoring your score in the back office so you can kind of see it actually build. And they actually even, I think it's after 6 months worth of payments, I have to remember that. They'll actually qualify you for a secured card. It's only like $100 or so, but still it's a revolving trade line. It's a major card, not a retail card. So SelfLender, they have 12 and 24-month options. Always do the 24-month option. Why? Because for personal credit, it's the longevity that builds the high scores. That's why you're not doing things like Affirm, right? You're not doing 12 months. You always want your installment accounts to be over your credit repair timeline. If you need 9 months, 12 months, 14 months to work on your credit, then you want your credit builder installment account to be 24 months. So it's building for you while you're working on your credit, building for you through your mortgage pre-approval, building for you while you look for a property, building for you while you go to closing. You don't want to close out while you're trying to get that thing and then your scores drop, because when installment credit, this is a nugget, is paid in full, it closes. Right? That's a difference. Revolving can stay open. Installment is a loan. Once it's paid in full, it's closed. So always do the 24-month option, guys. This is where it's like I said, it combines credit building and savings. So it will go in your credit report. It will look like a personal loan. Every single month, $25 comes out of your checking or savings account. They report it as an on-time payment to the credit bureaus. Guys, I've seen people get like 30, 50, 80 something points with it, okay? And then at the end of the 24 months, they kind of unlock that CD and kind of give all that money back to you, minus whatever fees and so forth. So I absolutely love SelfLender. I've used it for a ton of clients. I've used it for my son before, like everything. The only downside is that they do have, and another upside to it too is there's no security deposit. So if you're somebody who doesn't have a whole lot of money, but you need to build credit, you guys can just apply for a SelfLender. And I think there's like a fee to get started, like $9 or something like that. And I think there's some like annual fees. So that's like the only like kind of downside. All right, the second option is Chime, guys. Chime. You've never heard me talk about them before. This is revolving. Okay, so no annual fee. There's no credit check, so a soft pull. They report to all three bureaus, so that's still a plus, right? And it actually goes in your reports really fast, like within 30 days or so. Now, the only thing that I don't kind of like about them, guys, is that you have to actually sign up for a Chime account, right? So almost like a Chime bank account. And you have to have at least $200. How much, Terri? $200 a month direct deposited into your account with them, and then they kind of use that for your revolving trade line. Now, if you are unemployed, you can't use it because you're not going to have direct deposits. If you are self-employed, you can't use it because they want direct deposits from an employer. So the only kind of downside that I see to it is that you have to be employed. You have to have a checking or savings that you have to open up an account with them that they kind of link to the card, and you have to have at least $200 a month kind of transactions direct deposited to actually qualify. They also are not in all states. But even still, the reviews on Chime are really good. Like those requirements are not super crazy. A lot of people kind of meet that requirement. And then they also can be set on auto pay, which I like. So as long as you have money in your account, it kind of auto pays. You can kind of never have a late payment. Now, nugget right here, guys. You cannot be late on your mortgage, late on your card note, late on all of your credit cards and stuff, and then get these credit builder accounts and think that you're going to see a big boost. You're going to have to clean it up for real, guys, okay? That means work on your personal credit and work on the things bringing you down, and also use the credit builder accounts. Another nugget here, guys, is for people with high utilization. This is my people with higher scores who are trying to transition into business credit. Right? This is where, maybe you have high utilization, you don't have a whole lot of money to pay everything down. Well, if you add a revolving trade line that has a limit and is at 0% utilization or 5% utilization because you're not using a whole lot of it, strategy, guys, that can bring your overall utilization down with no money out of pocket. It's a way to tackle utilization. That's one of your biggest problems and you don't have a lot of money. Got it, good, guys. Another nugget, you guys, you need these nuggets because this is where you guys are missing and not getting the results that you want. Some of you guys will be like, well, I can get my credit score to where I need to be in like 3 months. But say your goal is a hard money loan, or your goal is a conventional loan, or your goal is like a FHA loan for doing house hacking. And you guys need to save your what? Down payment money. So I'm like, how long is it going to take you to save your down payment money? You're like, 6 months, 12 months. Well, guys, if your scores are teetering, get a credit builder account to build for you while you're building your security deposit and down payment. Come on, somebody, because if you're about to do a mortgage pre-approval in like 30 days or 60 days, you do not want to add new accounts. But if you have at least 6 to 12 months, especially for real estate financing, where you're trying to actually build up your scores for something big, the big money, then you want to add these accounts so it can build for you right away while you're working towards your goal. All right, the next one is credit builder card. Write that down, right? And guys, I'll put the links in the description of my video for all of them. Credit builder card is going to be like a Visa or a MasterCard. Usually it's like Open Sky, a First Premier. There is a security deposit, like $200, okay? Guys, you're not going to ball out with $200, right? But it's the combination of open available revolving credit and paying the things on time that actually help you build your score. Now, soft inquiry, we love that. Reports to all three bureaus, we love that. They'll approve almost anybody unless you've defaulted with them already before. We love that. Security deposit, not the best thing. Annual fee, not the best thing. They have that, right? Fees for late payments, monthly fees, we don't kind of like all those things. However, one thing I actually do like about them is it's a major credit card, not retail, and you can get 2. Come on, somebody, right? So let's say you have $600. Some of you guys will say to me, well, should I get one secured card for $600? And guess what my answer is? No, my answer is get 2 cards for $300 each. Guys, we'll work on credit limits later, right? But right now, while you're working on your credit, you want the open, available, revolving accounts, right? So having 2 positive trade lines is going to help you build faster. Strategy, guys. Is there anything else I want to say to that? There's no, like I said, no annual, there's no hard pull. And again, almost everybody is approved. The only thing other thing I don't like about them is they don't have the auto pay option. So you have to be really mindful of sending in your payments on time, okay? The next one is credit strong. So Credit Strong is comparable to SelfLender. This is another installment account, guys, okay? Now, some of the things I don't really like about them is that they're not in all states. They're not in all states, and they have like their fees kind of vary depending on the option. So some good things. Soft inquiry reports to all 3 bureaus. They have options that go from $1,000 all the way up to $10,000. So same thing goes in your credit report, looks like a personal loan. As you make the payments, your score is going to increase. Why do they have a $10,000 option? Because people who are trying to transition into business credit that need higher limits reporting on their personal credit can use an account like Credit Strong. They have repayment options that go anywhere from like 12 months, I think, to 44 months. Guys, you only need 24. Account aging is like, if you ever hear a lender talk about account aging or having like insufficient credit, guys are looking for at least 24 months of positive payment history on your personal trade lines. You don't need something 44 months or whatever. If you want to do it, if you want to kind of like draw it out like that, you can, but you really just need about 24 months is what I always recommend. So again, like 7 payment options, so it can be confusing. You don't really need all of that. They do have a one-time administrative fee. They do have some other costs associated that are going to vary based on the payment option, but it is still a very good option. Like I said, they don't report in all states. But another good thing about them though, this is installment credit, guys, and they will actually give you 2 accounts also. So you guys can have 2 installment accounts if you want to kind of build faster and you have no installment credit history at all. And then option number 5, y'all. I told y'all it was a learn, teaching video, right? It's like a whole workshop, y'all. You always got a free workshop. Is the extra debit card, guys. This is the only kind of quote unquote debit card on this list. It's kind of newer product, guys. It's had actually really, really good reviews. And basically what happens is you can keep your current bank. So not like Chime. With Chime, you have to have an account with them. With Extra, you link your current bank account. It is a revolving trade line. You know, it reports to the credit bureaus. It is a soft inquiry. I also like they have 24/7 support. You can earn actual reward points and you use it like a debit card, right? It's going to be linked to your bank account and you apply, you link it to your bank account, you swipe your card for other charges, and then they take that money right off. So you're going to be like a debit account, okay? You're using it like a debit account, but the benefit is that you're actually then going to be reporting your transactions to the credit bureaus. So they report at the end of every single month. The only thing I do not really like about them is they only report to 2 bureaus. They're the only ones on this list that only report to 2. They only report to Equifax and Experian. All the others that I gave you report to all 3. Got it, good guy. Oh, another thing what I like about them, is they have no upfront fee. Right, so they're just like with Self and like Credit Strong, where you don't have to actually have to put an upfront fee, so no like security deposits. So they're just going to go based on the balances in your checking or savings account. Which for my people transitioning into business credit, another thing is if you have good strong balances and you do something like this, that is a trade that's going to report with a high amount. Got it, good guys. So I hope that was helpful. I'll give you a ton of information. Okay. Rewatch, watch again, watch as many times as you need to make a list, and I'll put the links in the description. One quick announcement: Elite 10 group coaching got to guys. The deadline to apply is March 13th, and cohort 9 is going to launch March 17th, 2022. I'll put the link in the description if you want to work with me directly and get group coaching. I would love to help you. And my one last nugget I want to tell you guys is you have to be coachable and trainable. Stop saying you want to be at a different level and you don't want any feedback, you don't want any correction, you don't want any guidance. You have to be coachable and trainable. And I get it. So many people know everything. You guys have had a certain level of success. But obviously, if you're reaching out for some kind of mentoring or coaching, there's a level above you. You have to be humble enough and wise enough to know that there's people that are at a different level. And when you're investing in a coach, investing in a trainer, investing in a masterclass, investing in a program, you're trusting that that person has a result that you don't have yet. So don't ask for correction and feedback and coaching. And then when somebody gives you the information, like, well, that's not what I want. That's not what I need. Well, I already know. Well, if you know it all, come on, somebody. Then why do you need a coach or trainer? I promise you, the wise people, we all, myself included, has a coach. Has mentors that feed into me. Why? Because there's still room for me to grow. Great leaders are great students. Iron sharpens iron. You must be coachable and trainable. If you know it all, then congratulations. You're perfect, and I want to be like you one day. Amen. All right. I hope that was helpful, guys. Have a great day.